All right, so today I'm going to be teaching you on how to plot a trend line. Remember our previous class, we talked about how trend line could also serve as a dynamic support and resistance in a slant way. Now, if you're looking for the trend line tool, this is a trend line tool. This is where it's located here, right here. On your phone, you cannot tap on the screen on your chart, then it pops up. Then when the cyclical stuff pops up, you click on those shapes, then you look for a trend line amongst those properties. That's the trend line to right there. So for the benefit of this class, I'm going to be using GBP USD and Euro USD for example. All right, so you can just this is what I use almost every time. This is basically my major strategy, trend line. So how do I spot trend line? You could plot trend line on 1 hour and on 15 minutes because my major trend, since I'm a day trader, my major trend is 4 hours. I follow 4 hours, and the current trend I used 1 hour, and I pick my entries from 15 minutes. Let me write that out. Major trend from H4, the current trend from H1, the entries on 15 minutes. Now, this is what I mean by that. So whenever I'm trading or whenever I'm about to trade each day, first I go to the 4 hours to check, to look out for the bigger move. Now, as you can just see on H4, on Euro USD, you can see that the price is heading to the downside. It's heading downwards. And the reason that is you can see already, you can see this stuff, right? Even from here too, you can still know that price is heading downward. Okay, although price is about to start reversing to the upside, but we're not looking at that here. But all what we know is still on a downtrend. So what that simply means for us is we are going to be going for the buy more of the buys than the sells. Okay, that's what that simply means. So with that said, then we'll move ahead to the H1 to check the current trend, because there are times that H1 may be up while H4 is down. So as you can see right now, we already have a breakout from the H1. This is a trend line. This is a trend line. We already have a breakout. I'm going to explain how to plot a very good trend line. Just a few minutes, how to spot trend line, good trend line. So this is already breaking out to the upside. So we have had, now we should go to 15 minutes for entry. Look for a perfect entry. There you can match your entry with your maybe TDI or RSI or any indicator you use, anyone that you use. You can use a stochastic, you can use RSI, you can use a MACD, or any divergence indicator. But for me, I prefer traders dynamic index because that's what works best for me now. First, how do you plot a very good, how do you know a very good trend line? How to spot a good trend line, how to know a good trend line. Peaks and trough. That is high and lows. That is, where's your high and low? Your high and low is, this is a low. For an uptrend, you focus on these sides. This point, this is a low. And this is the point of breakout too. Then it broke out at this point. Upon the break, you trade. Okay, now let's try to connect that. Let's connect that with our trend line. Connecting that, will take from here, touching here. You can see one touch, second touch, third, fourth. Upon this fifth one, it broke. Upon the break, sometimes you have to wait for a retest. Sometimes you need to wait for a retest. When I mean a retest, like this is a breakout, okay? Sometimes it will come this way, it will retest, and then from there, it moves to the downside significantly. Now, same thing also applies, just like a support and resistance. The more the touches of this trend line, the more stronger it becomes. The more the touches, the more stronger it is. Okay. Now we could also look for more examples. You can see it's very easy to spot. Super easy. The more the touch, the more it move. The more the move. Right now, we have got this low. This is a low. And let's try to connect it at least 2 lows to know a very good trend line. 2 lows at least. 2 lows. You can see this one still matches with this whole big move. It still matches with it. Want to extend it out, it still match. You can see 1, 2, 3, 4, 5, 6. They still match. Now here's another one again right here for a buy. If so, for a buy, you have to note the highs. 1, 2, and you extend it out. 3. You can see touching here, it dropped. Touch here, it dropped. It wasn't able to touch it. Upon the break, it retest. This is an example of the break and retest that I was talking about. You can see how the price broke out. Upon the breakout, it retested the line. It retested the same trend line before taking off. Okay, there are some people they wait for this retest before they get into the market for a buy. And most of the time, the one that has this break and retest is always very long. The breakout is always very long. So you always want to stay in the market and you enjoy the ride. Now, let me show you my example. Just make sure you connect at least 2 troughs or 2 peaks. 2 troughs or 2 peaks. This is a low. This is a trough. This is a second trough. Then just extend it out. You can see upon the break right here, you sell. Or there are trend line, there are mini trend line inside trend line. Now I'm drawing this on 15 minutes. Now let's take it to 1 hour. Sometimes what I do is I draw it from the 1 hour, then I come to 15 minutes to pick my entry. The reason is 15 minutes, 4 candles make up 1 hour. In 15 minutes, 4 candles makes 1 hour. Okay, so the reason, if there's any candle that let me just show you what I mean by that. This is 1 hour. This GBP is 1 hour. Okay, I draw this is a value trend line. First touch, second touch, third touch, broke and retested, right? This is a breakout and this is a retest, then bam to the upside. So the breakout candle, that's what we are looking for before we jump into the market. The breakout candle. Now for this 1 hour, the candle that broke out was this one, this blue one. This is a breakout candle. This blue candle, this small one, that's the breakout candle. So, but we will not be, then what, to know this candle, we have to go to the 15 minutes so we can get in earlier. So we can get in much more early. So let's drop a horizontal line on it. So that we can recognize it when we get to 15 minutes. So we'll downsize it to 15 minutes. Let's see. Okay, look at it. So in 15 minutes now, you can see the movement. Let me shift this and shift it away. So upon this candle, you will be entering the market. Upon this one, you will be entering. Then you make your stop loss the recent low, or sometimes you can make it your breakout count at this low. But you probably, there are times that it will retrace, it may take you out. So the best bet is just to make it this way. Let me do that. Your stop loss will be this point. Your entry will be on this breakout. Even this, in fact, this one, you can use this one as your entry, this breakout. But to be safe, use this one. Use this. Upon the close of this candle, you jump in. There are sometimes you need to wait for a retest. Okay. However, some traders they prefer to always wait for a retest. So after this retest, they see this confirmation touching this place. They see this confirmation, boom, they enter the market for a buy. And your target should be 1 to 2 minimum. But for a breakout, you can actually get a very high returns. So that way, a lot of people they prefer to trade breakouts. You can actually risk 1 to gain 5. It is that profitable. Okay, so that's that on breakouts. So now the most important thing, let me just reiterate, the most important thing is make sure you draw your trend line from 1 hour and you enter from 15 minutes. There are times that you want to draw from 15 minutes. That's when you have actually familiarized yourself with the chart. Because trend line that is drawn from 1 hour is more accurate than the one you draw in 15 minutes because of noise. What I mean by noise is market noise, like, let me do for example of noise. You'll be thinking that your trend line is broken, but meanwhile, it's not broken just yet. Example of noise is, you may think this is, okay, this is 1 hour. Let me change this place to 15 minutes. This is a very good example of noise. This whole area is noise in Forex market. The consolidation is what we call noise. Okay, so go to 15 minutes. Let's look for that same place. Exactly. Look at it right here. So now you would have been taught, okay, this is a very good trend line. This is a trough, right? This is another trough. This is a trough. Here's another trough. And here's a break. You would have been tempted to enter right here. Now, if you enter, what would happen? And you use this as a stop loss, to have taken out your stop loss. This would have been your stop loss according to my explanation earlier. Then you jump in upon the close of this long red candle. You wouldn't have made any money at all. So that's why it's very, very crucial you draw your trend line from 1 hour, so you don't get caught up in this kind of scenario. Okay, you can see it was still trending. Not that you're wrong, you're not wrong. It was still consolidating at that same point, consolidating, and later it dropped. So if you are using a 1 hour time frame, you will know that this is what you should be looking at. Let's go back to the 1 hour. This is what you should be focusing your attention on. Touch, it broke right here. This is a retest down to the downside. Okay, this is the benefit of using 1 hour. I've always known that 1 hour works best than 15 minutes because of noise. A whole lot of distraction on 15 minutes. Whole lot of distraction. So once you have drawn this now, let's say you've drawn this on 1 hour time frame, you go to the 15 minutes. To also have a very earlier entry that I used to do, that if you have familiarized yourself with the chart, you can see upon this retest, I also draw another trend line so that I can know a very fast retest, a fast break immediately. This is break, retested, boom. So on 15 minutes, I come, since I already know there's already a breakout, I'm not entering yet. I just trace, waiting for the break to the downside. So upon this candle break, I'll enter for a sell. There were times that I also do this too, though it's very risky. 1, 2, upon this break, when I knew that the candle was just broken to this point, immediately I enter. You understand? Just make sure that there's at least 2 troughs, two tips like this, 2 touch, 1, 2 for this one. This one we've got for this smaller one, 1, 2, break here. This one we've got 1, and here is 2, and here is the second one. Here's the second one. Yeah. So, oops. So that's that on Trendline. I hope you understand. Now let me do more example of Trendline. There are times that these are now very good Trendline. Though this is 15 minutes, it will be too steep. Like this one is it's too straight. If it's straight, you have to be very careful too. And all these things I'm saying, you have to measure with your indicator. Now let me show you how I measure with my traders dynamic index, my TDI, this stuff. Whenever I notice that there's a trend line break, first I've already noticed it's a downtrend or it's an uptrend. What I'll be waiting for, I'll just draw a trend line on 1 hour or on 15 minutes like this, touching 2 troughs. This is 1, second touch, third touch, a break right here. So I enter upon the break. So why will I enter this kind of market? First, I have to check upon the break. There have to be a cross between my green and my red line to the downside, and it should be on 68 or below 50. On exactly 68 or below 50. If it's below 50, then that's a very good one. Because remember, I told you how I use RSIs. When it's below 50, it's signaling a downtrend, the beginning of a downtrend. So I just get in there, use this as my stop loss in case the market did not respect my analysis. That's how it keeps going to the downside. Okay. Now here's another one again for the buy. Let's say you want to do the buy, just draw opposite trend line, 1 touch, second touch, third touch, extend it out again. This is a first break right here. Keep extending. Oh, this is 15 minutes. Let me take it to 1 hour so you see it clearly. This is 15 minutes. You keep extending. You can see later it broke out at this point. Upon the break, this is a sharp break. Upon the break, what happened? It gave us about 191 pips. That's crazy. 191 pips. That's how. Just make sure you touch 1, 2, 3. Break, boom, to the upside. 1, 2, 3. Now, after I gave 191 pips, it came back to retest. After the retest, to the upside again. It keeps going. That's how trend line work. Trend line work like magic. Like magic. Now, here's another one. We do this one from 15 minutes. It was so steep. But the actual one, the correct one would have been this one. break here, you trade. You trade to the downside. How many pips? Would have been talking about something about 233 pips there. So how I measure with it, if you notice anywhere that there is a trend line break, the price will go below 50 on my the TDI, the sentimental line and the signal line will go below 50. You can see upon this break here, they're already below 50. So that's signaling that we're on a downtrend. It's a confirmation, double confirmation that we're on a downtrend. So no matter what this guy do, even if it goes up here, what I'll be waiting, I'll wait for the cross close to 50, then I take it down. So what another thing I could also do is I will be drawing counter trend lines. This is what we call counter trend. Counter trend lines are trend lines that is drawn against the trend, counter trend line. Like I already know it's a downtrend already because it broke down to the downside. So I'll be taking small trend line. This also happens on 15 minutes. Now let me drop so that I can note on 15. So let's go to the 15 minutes to show you more what I'm talking about counter trend lines. You see this counter trend line I drew on 1 hour, it's so big right here. So I'll be drawing counter trend line. So upon the break of the counter trend line, I join the trend to sell. Like this is a counter trend line 1. A lot of touches here. So generally, I'm going to count everything as 1, 2, 1, 2. Break, boom, to the downside. Another counter trend line here again, because I know it's a downtrend, I will only be taking down trades. Another counter trend line here again, upon the break of this trend line, or if that's too steep, you can make it 1, 2, break, trade. This one broke, retested to the downside. That's how you keep picking it just on and on. I hope you understand. Up. So let me show you my example of counter trend lines. 15 minutes, all I do is first I note the bigger trend on 1 hour time frame. It works everywhere, and now and then it's working. Okay, now here's a very big example again. It's a trend line, right? Upon the break, retest, you trade, or you can enter upon the break, put your stop loss at the recent high here. You trade. You can see price move down down significantly. Now let's say you want to trade this buy. You want to trade this buy. All you need to do is go to 15 minutes, be noting this counter trend line. Upon the break, buy. And it's also touching this trend line, buy to the upside. This trend line, this strategy work like magic. Upon the break, buy. Upon the break, buy. This is the strategy I'm still using for my volatility 75. Upon the break, buy. Now let's go to 15 minutes. Let's drop a horizontal line so we'll be able to recognize where we're coming from when we get there. Okay, let's delete this. So you can see that the trend line we drew on 1 hour that looks so small. You can see how it's so meaningful on 15 minutes here. So you adjust it to be relevant with price. You can also do this. You can upon the break, retest, buy. Here's another small one again, counter trend line everywhere. Upon the break, buy. Here, upon the break, you buy. Upon the break, 1, 2, 3, 4th one, boom, you buy. You buy. Here again, you also buy. So it's just a win-win until you get to the peak, to the high. Then if you break the major trend line, which you draw from 1 hour, then know that the trend is about to reverse. Jump out from the buy. Now you change your bias to sell. You sell here, or you wait for a retest, start selling. As this sell is also going down, you start creating another trend again, so that you can put your trend line again. So let me just give you an example. As the sell keeps going down, look at the sell, start creating another long downtrend. You put on that trend line again. You see, it's a win-win situation. See, then the next thing is you start creating for you to join the sell, create counter trend lines, counter trend lines. This one is somehow tricky, but got one right here. Counter trend line. This one is so straightforward. It's that simple. You don't have to complicate the whole stuff to make money. Times I only target 50 pips. 50 is just okay. There are times you can even target 30 and put in a very good lot size. You make more money. 1, 2, boom, to the downside. 1, 2, boom, retest, boom. It dropped right there. This one is so slant, so I may not trade at this point. So we've got another one here. So I may not trade at this point. 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 So I may not Can you see that? One, boom, trade. 1, 2, drop, retest, trade. This one is the last one here. You trade. So that's basically much how I use the trend line. I hope you gain value from this lesson. You can also measure all this that I'm saying. You can just use your eye, you trace it with the TDI. You can pause the video and be tracing with the TDI. Upon you cross to the downside, that's when you should take the trade. Here, upon you cross, you can see the green crosses the red. You jump into the trade. Upon you cross, you can measure with the TDI. And below 50, if it's below 50, it cross and it's below 50, you can take it. If it's at 68 and it immediately cross, you can take 2. Like this example of where it is below 50. When I mean below 50, this is my TDI. You can see we've got 68, we've got 32, and we've got 15. So if the red and the green line is below 50 and this trend line breaks, take it a valid trade. If it's also close to 68 and there is a cross, as here is an example of that, you can also take. It is in 68, exactly 68, green and red crosses, take is also a valid trade. So you can just, the reverse is example for a buy. If it's a buy, you have to be close to 32 or above 50. And let me take you to that buy example. I'm messing around with this stuff. Take you to that buy example so you can just measure. You can also measure to your RSI. It's not compulsory to use this trader dynamic index, but however, if you want this trader dynamic index, you can message me. I'll send it to you. Okay, so you can see break upon the cross. It was above 50, right? Above 50. Look at this box. The green and red were above 50 upon the break. Boom, buy. No argument. Buy, buy, buy. Above 50 right here. When it broke, buy. Now this is an example of where it is just, it was just at okay, this one is also above 50. Now here's an example. Okay. Okay, where it says example where it's close to 32. Yeah. This one is also above 50. Just buy like that. The two of them is just fine using those two confirmations. So that's how you can trade without not using much indicators on your chart. Do not complicate your own trading system. Keep trading. Make sure to like, subscribe, turn on post notification on the YouTube channel to receive more new videos each time I drop new videos. All right. Bless you. Bye.